So we're going to be looking at what's going on in the markets today using chart patterns and price movement ranges, as well as market trend analysis to determine what it is we want to do. That is exactly what I do each and every day. Support, resistance, volatility, market trends, and the tools that I have on these charts right now are exactly what I use to accomplish that. So as always, I have my Autochartist plugin on my MT4 here. I have my PowerStats also running on the chart to give me intraday and end of day support resistance levels based upon volatility and historical price movement. They're updated every 15 minutes, so it's an active support and resistance. It's not static, say like a pivot calculation would be each day. Okay. So with that in mind, let's go ahead and dive into the markets and start looking at some charts and determining what is going on and what we'd like to do. If there are any particular charts you want to look at, if there are any particular time frames that you're watching or perhaps even trading, let me know and we'll discuss those as part of our presentation here. By the way, I also use the PowerStats here, the price movement range that you see in the upper left-hand corner. I also use that for trade management as well. Okay. So I think a lot of people are curious about what it is that we're seeing this morning in the Dow. We'll talk about that for a moment, and then I've got a request for the Euro New Zealand dollar. Okay, no problem. So looking at what's happening in the Dow, you know, a lot of people would look at the bounce yesterday and just call it what's known as a dead cat bounce. I have a cat. I don't find it offensive. I don't know that cats bounce any more than any other animal. So why it's called that, I couldn't even tell you. But basically, it's to suggest that it's a sucker move. In other words, it's a move that is not real. A 429 point rally, actually nearly a 30-point rally, isn't necessarily a real rally, but rather simply a corrective type move higher within the context of what is a lot of bearishness. Now, the reason I'm starting off with the Dow, even though our topic is Forex, is because it's my job each and every day to not only use the tools that are in front of me, my Autochartist, my PowerStats, my 34 EMA wave, my grab candles. I mean, these are the staples of my decision making. But it's also to understand the risk environment. Okay, and right now the equities are really letting me know what the risk environment is. Now I can confirm that, by the way, with charts like, and let me blow this up here. I'm going to blow up the emerging patterns window here. I can also confirm the risk environment with a dollar-yen, which is heading down quite sharply. Let me give you some perspective here, because when you look at the daily yen, we've taken back all of that Bank of Japan intervention. When will they learn? So we've taken all that back. Okay? You can see, and you can also see that the breakdown. Let me slide this little window over. You can also see that the breakdown began with a flag. Okay, this was actually whenever they're angled up higher, it's actually known as a bear flag. When the wide small channel is angled downward, That's a bull flag. So this is a bear flag. We broke the uptrend line support, and that was it. Gone, baby, gone. All right. That's one way to determine the risk environment. The yen strengthens when there is fear in the marketplace. The euro yen's another pair you can look at for the same type of determination. The dollar Swissy is another pair you can look at right now for the same type of determination. I remember posting an update about the Swissy and basically stating that I'm just going to continue to short it. And somebody said, oh, you know, intervention's imminent and I wouldn't want to be short. And certainly when there is intervention, let me talk about that for a moment because that is pretty important. When there is intervention, like we've seen the way the SNB did it, really with an interest rate type adjustment, and the way the Bank of Japan did it with flat out yen selling, when there is intervention, obviously that's going to increase the volatility, but I've never felt that it has the capacity to change a directional bias, especially in the case of a strong currency. I think it is easier to talk up a weak currency than it is to talk down a strong and safe haven currency, which is what the yen and the Swiss franc have been. And in this environment, that is virtually impossible. Okay? So here we are heading back down on the dollar yen and actually just continuing to push lower. We saw yesterday's price action on the Swissy. You know, the volatility, people might say, well, why did the Swissy press to new lows and the Dow closed up 430 points? Think about how the Dow got to being up and closing 430 points. It was Bernanke Day. I think we had a total of, what, an 800-point swing? We rallied 600 points in the last 75 minutes of the trading session here in the U.S. to actually get to that level. The volatility was insane. What's interesting is, for those of you that look at the VIX, which is absolutely skewed to a certain amount of bullishness, it was actually quite low, which is funny because you would think the price movement in and of itself would increase the volatility and reflect that in the VIX. But since the movement was higher, the bullishness, in my experience, tends to not increase the volatility of the VIX, which is why, you know, when I'm trying to determine what the volatility of the market is, I will not rely on something like the VIX. I will actually rely on something like PowerStats to give me price-based, volatility-based, historically price-based support and resistance levels. Okay? So, risk environment, volatility environment, that's really my first job as I'm taking the pulse of the market in the morning. So, I have a request for the Euro, New Zealand dollar. So, the first step in my analysis, and I can do this with this chart, is what is the market trend? What is the volatility? What is the directional bias? I can determine all that from the daily. Okay? So, I don't want to ignore the fact that over the past year, there's been a certain amount of really what I have to consider to be a dominant bearish psychology. Yes, we've had some very pronounced moments of bullishness and uptrend even, but for a look over the last year, easily, I would have to say that the downtrend is dominated. And the downtrend is definitely dominated most recently until the last, it's about 5 or 6 candles, where we've rallied through the resistance of the wave, and we're showing a little bit of near-term bullish sentiment and momentum, and maybe even a hook higher, showing the early stages of what could be an uptrend. Now, why are we suddenly getting this movement higher? Well, consider what's happened to the Kiwi and consider what's happened to the Euro. The strength that we're seeing on this chart, I think, is actually more reflective of the weakness we've suddenly seen in the Kiwi. Okay? When you look at, say, the euro US dollar, and then you look at the New Zealand dollar US dollar, it's pretty clear that the sell-off we've seen since we peaked at 88.42 on the New Zealand dollar US dollar pair, and then the sell-off we've seen not only in the Kiwi since, but also the dramatic weakness we've seen in commodities. Okay? I look at the continuous commodity index for that, and the dramatic weakness we've seen in crude oil has certainly weakened the New Zealand dollar. And again, I think the strength is not reflective of euro strength, but actually of Kiwi weakness. You should know the driver of the movement in the pair. There's two participants, right, in every pair. Know the driver of the price movement, especially when you see a dramatic move like this. Kiwi weakness, not euro strength here. So why is that so important to know? Well, the euro essentially is going nowhere. Okay? The euro essentially, in and of itself, it's really not going anywhere. It's congesting on the daily time frame, going back within an ever-narrowing range. It's really not reflecting anything. There's no new sentiment out of this market other than just a very ugly distribution. The New Zealand dollar, US dollar pair, we can definitely see how this chart really is literally an inverse of what we're seeing here. Now, part of the reason I do this type of analysis, even though the dollar technically has nothing to do with this pair, it has a lot to do with the way the euro is going to behave. And even though commodities aren't necessarily a big euro driver, risk appetite, risk aversion is, but it's a huge driver